Florida's condo market is collapsing, and fast. Once symbols of affordable beachside living, these units are now financial nightmares. HOA dues have exploded, with some owners paying over $2,000 a month, plus $50,000 plus special assessments just to keep buildings standing. Insurance rates have doubled, buyers are vanishing, and lenders are refusing to touch entire buildings. Condos that sold for $250,000 in 2022 are now worth under $150,000. From Miami to Deltona, the collapse is widespread, and it's only getting worse. In this video, we're exposing Florida, where the condo market is falling apart under the crushing weight of rising costs. Number 10. Orlando. Orlando, the city of theme parks and tourists, is now facing a very different kind of drama. A condo market teetering on collapse. As of mid-2025, condo sales in the Orlando metro area have plummeted over 31% year-over-year, with supply stacking up and buyers pulling back. But what's really choking this market? The brutal combo of skyrocketing HOA dues, surging insurance costs, and aggressive new condo safety regulations. The average condo HOA fee in Orlando now sits around $450 to $700 per month. But in older high-rises or luxury units, some owners are facing dues exceeding $1,200 per month. These hikes are largely driven by updated structural inspection rules, especially post-Surfside disaster, that require costly repairs. Many associations are issuing special assessments ranging from $20,000 to $80,000 per unit to meet compliance. Add in insurance spikes. Some premiums have doubled in just a year, and many retirees or fixed-income owners are choosing to bail. A recent report from Redfin showed that Orlando has one of the highest condo listing durations in Florida, with some sitting over 90 days unsold. The median condo price, once near $275,000, is now falling rapidly, with recent sales dipping closer to $240,000. Orlando's condo crash isn't just about money, it's about fear. Buyers are now steering clear of older buildings, knowing future costs are unknown bombs waiting to explode. Lenders are increasingly refusing to finance units in buildings with unresolved inspection reports or deferred maintenance, further cooling demand. With over 17,000 condo units currently listed in the greater Orlando region, and new construction still adding supply, the outlook is bleak. Without urgent legislative relief or HOA restructuring, Orlando's once steady condo market is buckling under its own weight, and fast becoming a warning sign for the rest of Florida. Number 9. Miami. Miami, once the shining star of Florida's luxury condo boom, is now caught in a storm of collapsing demand, skyrocketing costs, and investor retreat. While the skyline glitters with high-rises, many units sit empty or unsold. As of 2025, the average condo in Miami carries an HOA fee between $700 and $1,500 per month, with some high-end buildings hitting a jaw-dropping $2,800 monthly. And that's before special assessments, which can add $50,000 to $100,000 per unit, especially in older oceanfront towers requiring structural upgrades post-Surfside. The median condo sale price in Miami has fallen from $520,000 in 2022 to around $450,000 in mid-2025. But price is only part of the story. Inventory has ballooned. Over 30% more condos are sitting on the market compared to last year, and many owners are delisting out of frustration. Miami now has the highest delisting rate in the country, about 59%, as sellers refuse to drop prices in a saturated market. Financing has become another hurdle. Lenders are increasingly refusing to fund units in buildings with high deferred maintenance or litigation risk. Cash buyers once flooded Miami, but foreign investment has cooled. Many are now dumping units due to insurance costs doubling and stricter disclosure laws. Even in trendy neighborhoods like Brickell or Edgewater, buyers are more cautious than ever. Units in aging buildings from the 1970s and 1980s are hardest hit, many of which now require multi-million-dollar repairs that HOA boards can no longer delay. In a city built on luxury and image, the cracks beneath the surface are becoming impossible to ignore. With thousands of units overpriced, overassessed, and overleveraged, Miami's condo market is now a bubble deflating under the pressure of its own ambition. Number 8. Northport. Northport may not grab headlines like Miami, but it's one of Florida's condo markets sinking the fastest. Nestled between Sarasota and Port Charlotte, Northport was a pandemic-era boomtown. From 2020 to 2022, condo prices jumped nearly 40%, with many small two-bedroom units selling for $180,000 to $220,000. But by mid-2025, the music has stopped, and the crash is unfolding quickly. Condo prices in Northport have dropped roughly 15% to 20% since their peak. The median price now hovers near $160,000, and sellers are slashing prices as buyers vanish. What's fueling the collapse? Rising HOA dues and aging infrastructure. Many of Northport's condo communities were built in the early 2000s and now require significant maintenance. HOA fees that were once a modest $250 a month are now rising past $400 to $600 a month, especially with rising insurance costs and mandatory reserves. Worse still, many boards are levying special assessments of $15,000 to $35,000 per unit to cover roof replacements, seawall repairs, or exterior concrete restoration. For retirees and fixed-income owners, these sudden costs are devastating. Inventory is surging, and days on market have more than doubled in the past 12 months. Cash buyers are disappearing, and conventional lenders are requiring full condo reviews. Many buildings don't qualify due to deferred maintenance or low reserves. Despite the area's natural beauty and proximity to Gulf beaches, demand has dried up. Potential buyers are now wary of hidden repair costs and unpredictable HOA hikes. For a city that saw rapid expansion and speculation, the correction is painful and real. Northport is now a poster child for Florida's condo crisis, where the dream of affordable coastal living is being crushed under the weight of rising fees, aging buildings, and market fear. Number 7. Jacksonville. Jacksonville has long marketed itself as Florida's affordable big city. But even here, the condo market is feeling the heat. While single-family homes remain relatively stable, Jacksonville's condos, especially those built between the 1980s and 2005, are buckling under rising costs. In 2020, many condos sold for $130,000 to $180,000, but after peaking near $230,000 in 2022, prices are now trending down, hovering around $200,000 or lower in 2025. HOA fees in Jacksonville have jumped dramatically. Units that once carried monthly dues of $200 to $300 are now facing fees closer to $500 to $800, especially in older developments with insurance hikes and structural mandates. Several condo communities near the St. Johns River and Atlantic Boulevard have issued special assessments of $20,000 to $50,000 per unit, triggering panic selling among longtime owners. The biggest issue? Financing. Many condos no longer qualify for conventional or FHA loans due to insufficient reserves or delayed maintenance. This makes sales harder. Buyers either need cash or jumbo loan alternatives with higher rates. In fast-growing areas like Southside, San Marco, and Riverside, investor demand has dried up. Short-term rental regulations, insurance hikes, and maintenance nightmares are scaring off cash buyers. Days on market have doubled, and many listings are now seeing price cuts of $20,000 to $40,000 just to attract offers. The Jacksonville condo market isn't a total crash, but it's definitely in decline. With rising HOA burdens, unpredictable future repair bills, and reduced financing options, many buyers are avoiding condos altogether. Sellers, meanwhile, are stuck with a depreciating asset and a shrinking pool of interested buyers. Jacksonville's condo market proves that even Florida's affordable cities aren't immune to the state's HOA-driven housing squeeze. The damage is spreading, and fast. Number 6. Cape Coral. Cape Coral, once the darling of Southwest Florida's real estate boom, is now facing a harsh condo market correction. This waterfront city, famous for its canal-laced neighborhoods and sunshine, is grappling with soaring costs that are scaring away buyers and drowning current owners in rising HOA fees. In 2022, median condo prices here reached nearly $280,000, but by mid-2025, they've slid to around $248,000, a drop of over 11%. The real pain comes in the form of HOA dues, which have spiked from around $250 to $350 a month to $500 to $900 a month, depending on the community. Older complexes, particularly those built before 1990, are the hardest hit, with owners now facing special assessments ranging from $20,000 to $60,000 to fund necessary updates, roofing, plumbing, concrete restoration, and reserve contributions mandated by state law. Insurance premiums are also skyrocketing, especially in flood-prone areas near the Caloosahatchee River. Some owners report their annual insurance bills rising from $1,800 to nearly $4,500, with no end in sight. Many potential buyers are backing out during due diligence, especially once they discover hidden assessments or aging infrastructure issues. The inventory is growing. Condos are sitting on the market for 75 to 90 days on average, and nearly 30% of listings are experiencing price cuts. Developers have halted new condo construction in the area, fearing the market is overbuilt and underdemanded. Cape Coral's condo market isn't in full-blown freefall, but it's clearly struggling. With an aging housing stock, massive repair costs, and rising monthly obligations, many owners are stuck, unable to sell without a loss and unable to afford the costs of staying. In a city that once promised affordable waterfront living, condos are now becoming liabilities instead of assets. Number 5. Tampa. Tampa, one of Florida's fastest-growing metro areas, is now seeing serious cracks in its condo foundation. While single-family homes still see modest growth, the condo market is stumbling, weighed down by rising HOA fees, outdated buildings, and insurance shocks. In 2022, the median Tampa condo sold for $295,000, but by mid-2025, it's down to $238,000, a sharp 19% decline. One of the biggest culprits? Out-of-control HOA dues, which have risen from $350 a month to well over $700 a month in many older buildings. Add in skyrocketing insurance. Some policies tripled from $1,200 to over $3,600 annually, and owners are facing unmanageable costs. Several condo boards have issued special assessments of $25,000 to $70,000, especially in coastal areas like Bayshore Boulevard, Davis Islands, and Clearwater Beach. Tampa's condo buyers are pulling back hard. Many lenders now require full structural inspections before closing, and buildings that don't pass are essentially blacklisted from financing. In communities built in the 70s and 80s, buyers are demanding major discounts or avoiding altogether. Listings are now sitting 80-plus days on market, and price reductions are averaging $25,000 to $40,000 per unit. Investors are fleeing. Short-term rental restrictions, along with maintenance uncertainty, are scaring off Airbnb and VRBO landlords. Meanwhile, retirees and downsizers who once saw condos as affordable alternatives are reconsidering due to the unpredictability of future costs. The condo dream in Tampa is now loaded with financial anxiety. Even new construction units, once a hot commodity, are experiencing slower absorption and price pushback. Unless reforms come soon or HOA costs are stabilized, Tampa's condo market will continue its downward spiral. For now, it's a risky bet, and more buyers are choosing to sit it out. Number 4. West Palm Beach. West Palm Beach, a city that once symbolized upscale coastal living, is becoming ground zero for Florida's condo chaos. The market here has cooled drastically. While the median condo price was $310,000 in 2022, by 2025, it slipped to around $275,000. A drop of nearly 11%, with more cuts expected as inventory builds. The biggest shock for residents? HOA dues have exploded. Once averaging $450 per month, many buildings are now charging $850 to $1,200 per month, especially in mid-rise and high-rise units. In luxury complexes or older oceanfront properties, it's not uncommon to see fees nearing $2,000 a month. And that's without factoring in special assessments, which often run $40,000 to $100,000 per unit for structural repairs, elevator replacements, or code upgrades. Insurance is another financial boulder. After Hurricane Ian and continued storm risk, annual premiums in West Palm have doubled, with some condo owners now paying $5,000 to $7,500 per year just for insurance. As a result, many residents, especially retirees on fixed incomes, are selling at losses or walking away entirely. Condos are staying listed for 100-plus days, the longest average in South Florida. Over 35% of listings have had price reductions. Financing is also a challenge. Many buildings are flagged by Fannie Mae's unavailable list due to inspection or reserve issues, leaving cash buyers as the only option. Developers are pausing new builds, and investors are retreating from the short-term rental market due to tighter regulation and high overhead. West Palm's condo market is no longer a playground for luxury. It's a financial minefield. For buyers, the math no longer makes sense. For owners, the costs keep mounting. And for the city, it's a condo crisis that's growing worse by the day. Number 3. Winter Haven. Winter Haven, a quiet Central Florida city known for its chain of lakes and retirement-friendly atmosphere, is now facing a condo collapse that few saw coming. Once a hidden gem for snowbirds and retirees seeking affordability, the condo market here is unraveling due to skyrocketing HOA fees, structural repair costs, and rapidly declining demand. In 2022, the median condo price in Winter Haven hovered around $185,000, but in 2025 it slipped to nearly $158,000, a 15% drop. That may seem modest compared to coastal cities, but in a market where most buyers are on fixed incomes, the impact is massive. Many retirees are walking away from units because they simply can't afford the new dues. HOA fees that were once $175 to $250 per month have ballooned to $400 to $600 per month, with many communities also announcing special assessments between $10,000 and $35,000 per unit for roofing, stucco repair, or reserve fund replenishment. The Surfside legislation now requires mandatory reserve funding by 2025, and Winter Haven's older condos, many built in the 1970s and 1980s, are scrambling to comply. Listings have surged by 40% year over year, and the average days on market now exceed 80 days. Many properties are facing multiple price cuts, sometimes up to $30,000, just to stay competitive. Lenders are increasingly denying mortgages in buildings with deferred maintenance or pending lawsuits, pushing cash-only sales and driving prices down further. Investors are steering clear, and local agents report that condos under $150,000, once red-hot, are now tough to sell at all. Winter Haven's condo crisis is a cautionary tale. A once affordable retirement haven is becoming unaffordable due to hidden fees, poor long-term maintenance planning, and state-level reforms catching up with aging buildings. For many, the dream is turning into a financial nightmare. Number 2. Crest View. Tucked away in Florida's Panhandle, Crest View might not be a city you often hear about, but in 2025 it's making headlines for the wrong reasons. Crest View's condo market is in freefall, with prices collapsing at one of the fastest rates in the country. According to recent data, the median condo price here has plunged 32% year over year, falling from $218,000 to just $148,000, an unprecedented drop for a city of its size. Why is it happening? A brutal cocktail of rising HOA fees, shrinking demand, and poor building upkeep. Many of Crest View's condo developments were built during the early 2000s boom, but 2 decades later, those buildings are now showing their age. New safety regulations have forced HOAs to levy special assessments ranging from $12,000 to $40,000, and monthly dues have jumped from $200 to nearly $500 a month in some communities. This is devastating for owners, many of whom purchased during the pandemic surge and now owe more on their mortgage than the unit is worth. The result? A surge in delistings, short sales, and vacancies. Buyers are scared off by buildings with uncompleted inspections or unfunded reserves. Lenders are red-flagging condo associations with financial instability, making financing next to impossible unless it's a cash deal. With few buyers and many eager sellers, Crest View's condo inventory has nearly doubled since last year. Rental demand, once a cushion, is also slipping as local employment softens. Even investors are bailing, knowing the combination of surprise HOA hikes and structural liabilities make condos a risky bet. For a small city like Crest View, this kind of crash is economically painful and socially destabilizing. The fallout is just beginning, and for many condo owners, the road to recovery may be long, slow, and deeply underwater. Number 1. Deltona. Deltona tops the list as Florida's most dramatically collapsing condo market in 2025. Once a quiet, affordable bedroom community near Orlando and Daytona Beach, Deltona has seen its condo market nosedive, with prices dropping an eye-popping 32.2% year-over-year, the sharpest decline in the entire state. Just 3 years ago, condos in Deltona sold for a median price of around $210,000. Today, they're going for as low as $142,000, with some distressed listings dipping under $130,000. This collapse isn't just market cooling. It's structural failure driven by financial pressure. HOA fees in Deltona's older complexes have spiked from $220 a month to as high as $550 a month, a stunning increase for a working-class community. Worse, buildings that neglected long-term maintenance are now imposing special assessments of $15,000 to $45,000 per unit, forcing many owners, especially seniors and veterans, into distressed sales or foreclosure. Buyers aren't biting. Properties are languishing on the market for 90 to 120 days, and over 40% of listings have already had at least one price reduction. Lenders are rejecting buildings with low reserves, incomplete inspections, or pending lawsuits, essentially freezing the market. Deltona's downfall was accelerated by overbuilding during the 2004 to 2007 boom, followed by years of deferred maintenance and underfunded HOAs. Now, with new safety mandates requiring buildings to set aside substantial reserves, communities are scrambling, too late, to fund essential repairs. The outlook is bleak. Owners are trapped in properties they can't sell, can't rent for enough to cover costs, and can barely afford to keep. Realtors are calling this the worst condo downturn they've seen since the Great Recession. But this time, it's being driven not by mortgages, but by maintenance. Deltona is now the cautionary tale for Florida's condo crisis. And if nothing changes, many more cities could follow.